Hello, everybody. Welcome to episode 2 of my continuing series of The Markets Demystified. Today, we're going to focus on stocks. What are they? How do they work? What are they entitled to? And what's the purpose? Most people think that stocks are just a way to make money through investing or trading. But ownership in stocks allows you to set the course for a company. You are entitled to go to the annual meeting and voice your displeasure of how the company is going. Some of you out there may have heard about the whole Bill Ackman thing, where he's an activist investor trying to do things and change these companies, persuade them to how he wants. You can do that if you speak up and make enough of a stink. Now, listen, your votes in the company are proportional to the number of shares that you have. So what's a share? A share is just a piece of a company. Company incorporates and says, okay, well, we need to raise this much, so we're going to issue you stock in the company. We'll give you these pieces, and you put in, let's say, $40 a share. But that's not the same as an initial public offering. What I just described is what's called a primary offering on the primary market. And it's a primary offering. When you initially incorporate the company, you allocate shares in the incorporation. Okay. What is an initial public offering? An initial public offering is the first offering on the secondary market where companies want to go public and issue more shares in the company on the stock exchanges. This is a form of also publicity, in my opinion, as well. You have all this rahaha, shall we say, and they go public on the market, they're on the news, they're showing the auction process, which in itself is a beautiful thing, which I'll touch on in greater detail later, and how the stock exchanges work. But however, why would you want to invest in companies? Well, you're looking to invest for your future, for your retirement. You're looking to maybe you have a passion about this company and its product and you want to own a piece of it and ride the wave. Maybe you want to just get in and say something about it and maybe change the direction how a company is working. There are several reasons. But stocks give you that perspective. They give you that window, shall we say. Are there disadvantages to owning stocks? Yes. The biggest one, in my opinion, if a company does get dissolved, bankrupt, in receivership, etc., common stockholders, which is obviously the most common form of stock out there on the exchanges, can be at the bottom of the totem pole, and in the form of bankruptcy, receivership, etc., will get the least amount of money in return. They'll get their money back. I mean, basically, you risk losing it. So, there is risk inherent to stock ownership as well. Well, how does the dissolution process work? Well, you go to bankruptcy, you allocate first to the creditors, and then to the bondholders, then to the preferred stockholders, and then to the common stockholders. Preferred stocks, it's a slightly different class, still traded on the exchanges, still just as liquid. Whoa, I just threw out a term there. Liquid. Not everybody understands what the word liquid means. Liquid means that it's easily convertible into cash. Typically, when you do a trade in a stock, it's called a T+3. Well, what's T+3? Well, let's say on a Monday, you sold 1,000 shares of XYZ company. Okay? Let's say $40. You figure $40,000. So the trade date, and you add 3 business days, it's called settlement. You'll get your check in 4 days in total. That's what T plus 3 stands for. So it's fairly liquid. It's not as liquid as, let's say, a savings account or checking account, but it's still liquid. The stocks are inherently liquid, as opposed to having a certificate of deposit or owning bonds. Although you could trade those at any time as well, but again, they're not as liquid and not as fast as the stocks are. I also want to, say that when they are trading and you look at these prices moving, how are the prices determined? Well, they're determined through a simple law of basic economic theory called supply and demand. Supply and demand basically states what? That there's so many shares out there. Yeah, excuse the helicopter. I think I'm being searched here. I think I rubbed somebody the wrong way. But supply and demand basically is one of the most fundamental elemental rules of economic theory. That in a market economy, prices are dictated by quantity, which is supply, and interest, which is demand. So the more demand, and if supply stays the same, prices go up. The less demand and supply stays the same, prices go down. Where those two intersect on that graph, that's called the equilibrium price. So this affects stocks as well. It's an auction market, which I'll explain further on in the course in more detail later, how stocks are traded. The whole process of calling up your financial advisor or broker, or going on the computer, putting an order through. I just wanted to give you guys the basics of what stocks are. And I'll get into more in depth, later as far as how they're traded, what to look for, how does emotion play into it, how does technology play into it. There are things that you have to look out for. The biggest thing I can tell you is do your research. Look at the financial statements of the companies. Any public company has to release them. They're called a 10K and a 10Q. Okay? They have to be released. They got to be checked over by the Securities and Exchange Commission. And also, everything has to be done by an auditor and make sure everything is what it is in theory. Is there stories of fraud? Of course there is. It's common. I hate to say it, but it is common. And you really, really have to, be on your toes. And I'll tell you a story that when I was getting into this was back in 1999, 2000. I don't know how many of you are familiar with the Corning Company. They do glasswares. Back then, they were getting into fiber optics. And I was looking at my quote screen, and I saw it was like for $1. I called up my broker, and I told him, I said, I want to buy, 10,000 shares at $1. It's there to lose. He's like, no, it's $1. There's a reason why. Yeah, there's a reason why. But you know what? About a couple of years later, I sold those $1 shares of Corning for $32. That's rare, especially these days. People are looking to, I see these days do a lot of trading, day trading, get in and out as quick as possible, ride a tick, which is a minimum price movement in the shares. That's okay. It's all well and good. But there are certain things like tax advantages if you hold on to it for a long time in capital gains. And all this is changing all the time. And so I'm not a trader myself. I'm more of an investor for the long haul. But stocks can be a wonderful thing. And it's not that scary if you know what to look for, what to do. And that's the aim of this course, is to try to help you decipher what all these things mean. How do they work? A lot of people who are in the markets, LeBron James is one of them. He's a big-time investor. Mark Cuban, I don't know if you're familiar with him, the owner of the Dallas Mavericks and Shark Tank there and the thing. He's a big-time investor. Kevin O'Leary, big time. You know, these guys took their knowledge and expertise and they did it. And it's a wonderful thing. You know, that's what makes this country great. That's what makes the markets great, because they can allow you to make something out of very little if you get in at a reasonable price. Further on in the course, I will discuss different kinds of accounts, margin accounts, Reg T accounts. I will discuss, again, how they're traded. I will discuss there is safeguards. You have SIPC, SIPC. You have FINRA that supervises how firms and how advisors function. It just wrenches my heart to hear stories of how people were taken advantage of. And I've seen it happen. It makes a bad name for us in this industry. But I'll talk about that later, what to look for your financial advisor, the tools that are out there. But I hope that this gave you a little bit of insight into what stocks are, how they work. If you have feedback, please share with me if you want to know some more in detail. This is just a general overview. I will get into greater specifics into it later as far as the mechanics of everything. I appreciate your support. I appreciate you listening. And I hope that I can help you demystify some of these things, because it can be intimidating. I thank you for your time. If you like the video, please give it a thumbs up, share, and subscribe. And please, if you do enjoy this and you feel like you learned something, if you can, that's what I have, Patreon, and it would help me go a long way to make this a better channel. I'm just starting out, and I know it's not the most polished, videos, but it's just me being me. And in closing, I would also like to say to you to never give up on your dreams, to fight and persevere, and no matter what in life, there's always a way. Where there's a will, there's a way, and never give up. Thank you very much for your time. Thank you for listening. I appreciate it. Have a wonderful day. Thank you.